which I'll load up now, is the inside bar. Let's have a look at our indicator for the inside bar. I'll turn those other two off. Again, inside bar, fairly simple. We've only got the one filter there on the inside bar. Let me close that. The inside bar strategy is a nice easy one as well. And let me just pull that one up. So the inside bar is our, adding this information out to you as well. Again, AB bar formation, circle with a B bar. Either bullish or bearish is an inside bearish A bar price action. So that's our inside bearish bar. There's our inside bullish bar. And once we get that set up, we're looking for the A bar to close above the 20 period moving average for a long and below on a short. So nice and simple again, and that's another one of our price action systems. So the idea for us is to develop four to five of these price action strategies and have them running in the one market. Ideally, like, we want to have the pin bar reversal, inside bar, outside bar, 3-bar crossover, and the shave bar strategy. So those four would be your, say for example, your cluster of portfolio, your system portfolio for price action, and you would do your testing on whatever market you're trading. So that's what we'll be kind of looking at as far as our systems and our markets that we're looking at. Now, the other strategy, and again, we've got, let me just turn that indicator off and I'll add in that, let me turn that one off, I'll go close. So we have our inside bar strategy, and then we've got our paint bar for the inside bar as well, which is here. And that shows you our inside bars that come up. You can see that here, red and yellow again, show our inside bars. So anytime you're using these strategies, definitely worth loading up your inside outside bars. And the final one that we want to kind of look at tonight as far as our price action systems is our, let me just close those two, and we'll go close, is our shave bar. Now this is probably one that I've got a bit of a bias towards the shave bar. Why would you think I might be slightly biased towards the shave bar as a strategy? So we'll grab the shave bar, add that to our systems, we'll go OK, and I'll just bring up the shave bar walkthrough. Here's our visual of the shave bar. Tell me what strikes you automatically about the shave bar here. So a shave bar is that bar, that candle that sets up where price closes close to the high of the day if it's a long, and close to the low of the day if it's short. Why would that be an enticing potential trade setup or price bar to be trading, do you think? What is that showing you with what's happening with the market? You've got strength, haven't you? Because you've got the inside bar's a little bit indecisive. The shave bar, well, the outside bar is kind of the opposite. It's very decisive. The shave bar is again that as well. It shows you that there's a lot of activity in the market, well, not activity, but there's a lot of strength in the market based on the longs or shorts. So it's definitely a strategy that I like, and particularly I like the fact that we've got that, because you'll often see, or not often see, you'll sometimes see a pin bar reversal and then either an inside bar or a shave bar. So you'll sometimes see those bars set up, and what does it give you? It gives you a little bit of a hedge against what's happening with the market. So combining the two systems together is a great way to be doing your testing. Now the shave bar, as I said before, we've got it as a strategy indicator and as a strategy. So there's our shave bar, not bar percentage, and then you've got entry and then ATR. So nice and simple again. So there's not a lot to the entries. They're very simple, but again, it's something that we want you to kind of have a look at, do some basic testing on, and then we're going to send out the the shave bar with our additional entry filters, and you've got the stops, GMT exits as well to play with as well. So remember that with the strategies we're sending out, we're going to be adding to our workspaces. So at the moment with our GMT trend, which we've already sent out to you, that had half a dozen workspaces that we were using for our GMT trend. So we're going to be adding to that that cluster of workspaces. The other one that we're adding in, sending out here, is we're sending out the continuation trader. Now, I think some of you have already seen, or you would have seen last week's presentation on the continuation trader. It's one that I really like. It's a strategy that's nice and simple. It's using momentum again. It's a little bit different to the breakout because we're asking, or we're wanting to see a minimum price move before we take the trade. We need to see a bit of a trend established, and we're looking for price to come back and trade within that and use support or resistance to hit that 200 period moving average. So you'll see that happen a lot on this. We also have the ability to use and add in the VWAP, and that is obviously a very powerful thing for us because it allows us to filter out a lot of trades and go for the more high probability setups. And you can see here, this is a nice example of a continuation trader. We've got a minimum price move from so with our GMT Renko trend and our GMT Renko hybrid, our catalyst for determining the trend is our 200 period moving average. That's it. Nice and simple. The VWAP is used, our volume weighted price is used for identifying support, resistance, or areas of value. So if we're above the VWAP, we're long and strong. If we're below, we're short and we're sellers. If we get an opportunity to sell below that, if we get an opportunity to sell below that, well, that's great because that allows us to then see some value in our trade, whether we're buying or selling. So you'll see here that the continuation trader, we've got an exclusion zone or a zone of entry. So the most significant thing is our minimum price move. We need to see minimum price move. You as the trader are determining what your price move is. So if you decided, well, look, if I'm going to take a trade, I want to see at least, if it's crude and it's on a 0.1 chart, I want to see at least 70 points. So let's say 70, 80 points. I want to see some range because what am I looking for with a continuation trade? I'm looking for a big range, pull back in the market, and then to go again, aren't I? I'm looking for that to reload and go again. So that's what I'm looking for. I'm looking to shoot out, get some momentum. Price probably pushes a bit too hard too early. Then you get that contraction back into that 200 period. Then we see resistance set up. Ideally, I want to see the VWAP in this zone. So me as the trader, I have the input to allow me to set up a zone above and below this 200 period moving average. Same as we have the key levels. Now, that zone is going to be my confirmation zone, my confluence zone. So if I go into my strategy here, I insert strategy. I'm going to insert the GMT Renko 200. There it is there. Alright, that's my system there. Let me get rid of that one here for a sec. Go OK. So I've got my start time, end time. I have my next bar on open. So we have to have that set at 1, don't we? I have to have my minimum EA, minimum move in ticks. That's from my 200 period. That's now I've got before the EMA ticks and then after. So what that allows me to do is I can make that 0, so it has to hit that line, or I can set a zone up above and below. So what I'm saying is that once I get my minimum price move, which is 80 points, so I'll set that to 80 because that's what I'm looking for, then I can decide, right, well, when price bounces back to that 200 period moving average, I want to have I don't want it to overshoot more than 20 points, and I don't want it to be less than 20 points from the EMA. So let's go cancel. Let's go OK. where does that sit us? So remember, we're trading crude oil. Let's get our marker up here. There's the MA. That's our midpoint, our midline. 29 points. So what have I got there? I've got 15 points either side, haven't I? So if I make that 20, then I've got 40 points in total. So I'll split that 20-20, and that's my trade there. So have I hit the sweet spot on that trade in relation to getting my zone right? Because there's a few things I need. I need to see support. That support has to be in that appear with that turn bar. I have to have that support set up, or resistance I should say. If I don't have that, I don't have a trade. I can take the trade with the VWAP as well as additional confirmation, and I get the trade entry based on, at the moment, we're going to add an additional filter which will be the break of the low, but at the moment my entry filter is that turn bar, that red turn bar, which is here. Is everybody following so far? Now the additional filters I have within the strategy are that I can take the trade based on also me being overbought. So you're not going. Are you always going to see the market overbought on this move back to our 200 period moving average? Is that going to be a regular thing we're probably going to see? I mean, obviously you're going to be guessing a little bit here, but what do you think as traders and people who've been using the systems for a while and knowing, you know, what can happen with price action? Do you think that's going to be a common thing, us being overbought? And I'll frame it up slightly differently. Think about the trend, and then, so we've been in a fairly strong trend, then we get a bit of a bounce back. Probably, it depends on really how far it pushes back, doesn't it? And how sharp it pushes back. So typically, probably not, but if we're trading volatile markets, then yes, quickly we can get overbought. So the other thing we can do is we can use the MACD as an opportunity to get divergence. But I don't think we're going to get too many opportunities for divergence. We may get a little bit of a double top or a little bit of a W action here, where we get our MACD, that second peak. Let's say price moved down, then went back up and made a second peak here. That would probably be divergence. You'd probably see that. Absolutely, Gary. We have to have that entry on this bar on close. So let's just quickly go in there as well. Any time we're doing our trading, that has to be on as well. So that has to be 1, doesn't it? So we'll just change that over. So remember, with our Renko charts, absolutely want to have that as 1 if you're using custom Renko. Now, but our turn bar is here. That's our entry point at the moment. What it does is it does 2 things. If we get a little bit more of an overshoot, we're going to get knocked out of the trade. But what it does do is it helps reduce our risk, doesn't it? Because the size of that bar, remember, is we have a bar there that is going to be effectively let's have a look at our 34. So we've effectively got around about 20 points. So it's 19, 20 points. So we might have a 22 point stop. A nice tight stop there. Price breaks above the high. We're out of the trade. But what's nice about this is that we don't have these big 30, 40 point stops. We've got a nice little tight price action there. And the other thing is good. The other thing that is good too is that if we get this trade going our way, what's our reward to risk look like? If, for example, we exit on now we've got a couple of options, but say we exit on the 50 period, or we exit on the MACD BB, because remember we have the MACD BB, and I think the MACD BB is going to work beautifully with this Renko. Because look where the MACD BB gets us out on the first exit, and there's the second exit there. Nice little exit entry. So the MACD BB, not first but second sequence, gets us out nicely there. So what would our reward to risk be on that trade? Yeah, initially it might be, say it potentially is going to be, yeah, 2, 3, 4 to 1, could be even better. So we're really in a good place for these trade setups. That's what I like about the continuation trader. I like the fact that you're starting with a very low risk. Yeah, sure, you can make price break the low or the previous swing low, but then you're giving up a lot of distance, aren't you, on the trade? So that you've got that recall effect, and you're really kind of soaking up a lot of the move by making it push back. So guys, that is the continuation trader. Nice and simple, nice easy strategy. I think you're going to enjoy working through that as well, and just doing the relevant testing. You've got the RSI entry. Remember that you can program the RSI based on the standard default settings of 1430/70, but you can optimize on that as well. You've got your MACD divergence. So as I said before, I don't think you're going to get a lot of trade entries based on MACD. In fact, I'm pretty sure if you apply that, you're going to find that your trade numbers drop down. But look, hey, it's always good to do some testing on that. As I said before, I'll be sending out more workspaces with these systems in them. Mainly, the main thing about today or later tonight is that you get the GMT systems, and then you can kind of start over the next couple of days just getting used to them and having a bit of play with them, and just enjoying, getting to do some testing on them. So there'll be more of these out over the coming days and week, and we look forward to kind of sharing some of the strategies we're putting together with you as well. So guys, that's probably going to wrap it up for me tonight. I will send out a bit of an update on our top 10, and I will be shooting out the ELD as well, so keep an eye out for that. And I'll send out a copy of this recording too. So any questions before I go, let me know. Otherwise, have a fantastic week. And as I said before, there's lots more coming, so looking forward to kind of sharing that with you as well, and seeing how much difference we can get with our between our current indicator-based systems, our Renko strategy, and our price action systems, and just comparing, which ones are starting to come out on top. So all the best. Have a fantastic week, and I will catch you next Wednesday. Otherwise, I'll be chatting to you over email or in person. Cheers.